Well, good afternoon, ladies and gentlemen, and welcome to the American Hellenic Institute series of our noon forums. This one today is one that is a very timely one, considering what we've all have witnessed in the last couple of weeks. Before I begin, though, I'd like to recognize a couple of individuals who are here with us today. We have from the Embassy of Cyprus, Neophytos Konstantinos, who's with us. We have from the Embassy of Greece, the Council Konstantinos Eu, and from the Greek Press Office, Artemis Conti, who happens to be actually the spouse of Mr. Eu. We thank you all for coming out here today. As mentioned, if you've been following developments the last couple of weeks, they've been really extraordinary in terms of economic developments on Cyprus. There's been so much written, so much has been said. You get on a daily basis just certainly continuously infiltrated with information on a daily basis that sometimes becomes very difficult to really understand everything that's going on. So we wanted to have a new forum here today of one of our own, Nick Karamoulis, who's going to talk about the Cyprus banking crisis, facts and implications for the future, because there are many implications, not just obviously for the country of Cyprus directly, but for the overall European Union, and frankly, potentially for the world's economy as well, as we've seen markets the last couple of weeks shift back and forth in different ways. Nick comes fresh off of his presentation on the Diane Rehm show, where he participated in a one-hour discussion just last week when this economic crisis in Cyprus began, and was called upon for his expertise. So it is really a pleasure to have him here today as one of our own. He's been with us for many, many years in association with AHI in various capacities. He serves, of course, most recently now on our board of directors in the capacity, as he likes to say, the Volunteer Legal Council. But a little bit about Nick, if I may. He is a founder and partner of Spikas and Karamoulis, and he practices in Washington, D.C., Baltimore, and New York City, with correspondent offices in Athens and Nicosia. He practices in the areas of business entity organization, international law and business transactions, e-commerce, securities, franchising, and appellate litigation. He has written numerous articles on corporate, commercial, and transactional law. He has authored a 3-volume treatise entitled Limited Liability Companies, Law, Practice, and Forms, which has been published in its 2nd edition. He is admitted to practice law in New York and the District of Columbia, the federal courts, and the Supreme Court of the United States. Nick holds a Bachelor's of Arts from Union College and a Juris Doctorate from Fordham University School of Law and a Master's of International Affairs from Columbia University School of Public and International Affairs. He was elected as a Secretary of the D.C. Bar and served from 2004 to 2005. He is a member of Publications Committee of the D.C. Bar and the Federal Legislation Committee of the Association of the Bar of the City of New York. He has served as co-chair of the Continuing Legal Education Committee of the D.C. Bar and teaches numerous CLE courses. Mr. Karamoulis chairs the American Hellenic Lawyers Society of Greater Washington, D.C., and as I mentioned, is a board member of the Institute, and really a tremendous asset to our organization. And it is a pleasure, I think really maybe the first time we ever had you as a speaker here, Nick, to welcome here today, who will try to shed some light on this current crisis facing Cyprus, and to see, how the impact and the repercussions will filter out during the course of that country and throughout the Eurozone. Nick, welcome.
Thank you very much, Nick. It's always a pleasure. My first job in Washington was AHI. So, Gene Rosides took a chance on a young lawyer, and we'll see if how it turns out. I'm still practicing. What I want to do here is lay out the facts as best we know them. There are a lot of opinions out there. There are a lot of interpretations of what has gone on. So what I'd like to do is just lay out the facts, and then we can get into the opinions and interpretation and implications in maybe the Q&A session. As with any subject, but particularly with Cyprus, you always need to draw the background. It was interesting when I was on the Diane Rehm show how little the moderator and the other two panelists knew about Cyprus, the background. And Cyprus has gone through, post-World War II, has gone through its share of crises. The imposition of the 1959 Zurich agreements led to a stunted form of independence, an unworkable situation which culminated in 1964 with Archbishop Makarios proposing amendments. The Turkish Cypriots, in reaction, left the government. Then in 1974, the coup against Archbishop Makarios, the elected government, engineered from Athens by the Greek junta, and then the Turkish invasion of the Republic of Cyprus in 1974, shortly after the coup. Fast forward to 2004, the two very important events: the rejection by the Greek Cypriots of the Annan Plan, which was basically a warmed over 1959 Zurich plan, and the acceptance of that plan by the Turkish Cypriots, although I should note that if you combine the number of total Cypriots, meaning Turkish Cypriots and Greek Cypriots who rejected the plan, it was a majority of Cypriots. Then also in 2004, Cyprus acceded to the European Union. In 2008, it adopted the euro. And then the current crisis now really began in early 2012. Let me put this particular crisis into a context. Cyprus became, after the Turkish invasion, 70% estimated of Cyprus's productive capacity, meaning agriculture, meat processing plants, some industry, was gone. It had been in the occupied area. So Cyprus became, intentionally, deliberately, a center for international banking. It was assisted in that era, in the 70s, by the tragic civil war in Lebanon, because Beirut had been the international business center, and Cyprus benefited from the fact that no longer existed because of the civil war. So then when Cyprus joined the EU in 2004, it became even more attractive as a banking center. When it joined the euro in 2008, it became even more attractive. So there were, and the Cypriot government was very shrewd in the way it implemented legislation to benefit and attract banking, international offshore banking, offshore companies, and so they had, the banks had large, there were large deposits. Cyprus complied with all of the EU money laundering and other types of laws. I think Cyprus gets a quote bad rap because old perceptions of the island being something like the Cayman Islands persist, and that's just not true. And also Cyprus had traditional ties with the Soviet Union, now Russia, going back to the days of the founding of the Republic, partly due, even though the Soviet Union, partly due to connections between Archbishop Makarios and the Russian Orthodox Church, but also even farther back, even very traditionally. So there was always a close tie, and then as Cyprus became a banking center, it was very natural that Russians, particularly after the breakup of the Soviet Union, would become a place for Russians to do business. In fact, even to this day, Limassol is sometimes referred to as Limassolgrad because it's just such a large Russian community there. But Cyprus maintained a low tax in comparison to other countries, other EU countries. And what happened, the deposits, the volume of deposits became huge in connection compared to the Cyprus's gross domestic product. And that is one aspect that has a big effect, as I'll discuss in a second. Comes the Greek debt crisis in beginning, I think it began in 08, but let's say 09. And Greece, as we know, had to seek an infusion of capital from the EU, from the Eurozone, to support and pay its loans and to keep its government running. Greece's problem was not a banking crisis. It was a government spending and a government bloated government crisis, so to speak, that needed to be taken care of, and too much lending, having taken on too much in loans. But as a result, though, during that period, Cypriot banks, and there are three main Cypriot banks: Bank of Cyprus, Laiki, or Popular Bank, and Hellenic Bank. They were encouraged to buy Greek government bonds. And the quirky thing about buying government bonds is, in the EU, is that because they're government bonds and they're obviously going to be paid and never discounted, the banks don't have to reserve for these bonds as they would have to for normal private loans. Cyprus the banks had no reserves for the Greek bonds they were buying. Come 2011, Greece does reach an agreement with the Eurozone, and the agreement was, well, you have to discount all Greek bonds held by sovereigns, meaning other countries, by 70%. Other countries like Germany, France, they could sustain that kind of a discount. See what that did to Cyprus, though. That meant that Laiki, particularly, but the other two banks as well, all of a sudden their bank capital was reduced by 70% because they held so many bonds. That led to the ECB, the European Central Bank, opening up what they now call an emergency lending assistance. So they would keep capitalizing on an emergency basis the Cypriot banks, particularly Laiki, because their reserves were gone down so low, and yet they had these deposits that they had to honor, and insured deposits like we have, FDIC insured deposits. Well, it was really the haircut that brought Cyprus to the situation it was in 2012. Cyprus, under then President Christofias, went to the Eurozone and said, we need money to recapitalize our banks. That's different than the money that flows to Greece, which is used to pay for government operations. It's a very different situation. And so the negotiations went on pretty much through 2012. Come 2013, February, there was an election. Probably the negotiations were basically halted until the new president was elected, and that was Nikos Anastasiadis. 2 weekends ago, the negotiations were started up again between the now new administration in Cyprus and the Eurogroup. And the Eurogroup said, look, we'll give you 10 billion euro, you have to make up the other 5.8 billion that you need totally to do the recapitalization. The finance minister, Mr. Saras, and the president looked around, says, okay, well, where do we get the rest of the money? And it kind of makes you think of the old Willie Sutton statement, you know, when he was asked, why do you rob banks? He says, because that's where the money is. And that's what happened. Basically, the government said, okay, we've got all these money on deposit. We will confiscate. Some people have called it a tax. It's a confiscation, believe me. There's nothing about it legally that looks like a tax. But so what they were going to do was to take 6.75% of deposits under 100,000 euros and under, and take 9.9% of deposits above 100,000 euro. Well, there was such an outcry. My own phone was burned off the hook, so to speak, that weekend, and it went ultimately, because it was such a basic confiscation, it had to go to the Cypriot House of Representatives. And just as a quick aside, you hear the Cyprus Congress, so to speak, called a parliament. Bear in mind, Cyprus is not a parliamentary system. It is a presidential system. The president is head of state and head of government, just like our president, President Obama. The elections for president, which just occurred, are staggered with the elections for the House of Representatives. So the current sitting House of Representatives was elected in 2011, and they will next be elected in 2016. The presidential election that just occurred, well, there'll be another presidential election in 2018. So that's the way the system works. But when you see Cyprus Parliament, they use the term Parliament and House of Representatives interchangeably. House of Representatives is the proper term. So the House of Representatives rejected this proposed legislation unanimously. We say unanimously, but actually with the one party, the president's party representatives abstained from the vote. So it is effectively zero. The House of Representatives has 80 seats, 56 of which are filled by the Greek Cypriots under the Constitution, 3 of which are observer seats for the 3 other religions, the Latin, the Maronite, and the Armenians, the other ethnic groups. And then the rest of the seats are reserved but empty for the Turkish Cypriots. So that's the way the House of Representatives works. In any event, it was a zero. We're not buying any of this. The European Central Bank then says, well, come Monday, ironically March 25th, we're going to cut off the emergency lending that we have been giving Cyprus if there's no deal. Negotiations go into the weekend. When I was on the Diane Rehm show last Thursday, it really wasn't much to predict. Didn't know what was going to happen. But a deal was hammered out. And when I say a deal was hammered out, it still has many portions of it that are kicked down the road. As the attorneys in the room will understand, when we know we have to make a deal, but we have disagreements, we leave it vague, and we'll worry about it later, what we do. And that's what happened here. But let me go through where the situation sits right now. And by the way, this deal, the current one, did not require the vote of the House of Representatives because it was accomplished through the banking laws of Cyprus and a restructuring of the 2 main banks of Cyprus, so there was no need to go back for a vote. and obviously it was done intentionally that way because they didn't want to go back for a vote. But where it stands now is the Laiki Bank is essentially dissolved and is being wound up. The shareholders and bondholders of Laiki Bank are wiped out, gone. Their money's gone. They, the EU, the Eurozone statement refers to them as fully contributing. Well, they're wiped out. That's the more important term. Now, Laiki has a lot of performing loans and other assets that are good assets. Those are folded into the Bank of Cyprus. The bad assets, like non-performing loans, are placed in a, they call it a bank, but it's placed in an entity that is government-controlled and will be wound down and sold off over a period of time. Those of you who are old enough to remember the savings and loan crisis in the late 80s, early 90s, that's essentially what we did, established the Resolution Trust Corporation to take the bad assets of these savings and loans and work them out over time and get them out of the banking system so that there would be no spillover from those. The other part of this is that the Bank of Cyprus will assume the $9 billion liability to the emergency lending assistance that Laiki incurred. So that is now going to become Bank of Cyprus's problem. There's a big concern with this provision because is this going to be too much of a burden on the Bank of Cyprus such that maybe a year from now I'll be standing up and tell you, oh, by the way, there's no more Bank of Cyprus. But that's what they did. As far as the accounts are concerned, accounts of 100,000 euros or less are considered insured accounts. Those are accounts like our FDIC accounts that are guaranteed and insured by the government. Those will not be touched. But accounts with euros above 100,000 are going to be confiscated up to somewhere between 30 and 40%. And we're not, even now, we're not sure exactly what the percentage is going to be. And this has obviously upset the big depositors there, many of whom are Russians, but many of whom are British. There are retirees, British retirees, because bear in mind, you find British retirees all over the world, because if they go back to Britain with their assets, they're taxed at about 80%. So they prefer to live in other countries and countries where the sun never set on the British Empire. And what those big deposit holders will get in exchange are share certificates, shares in the Bank of Cyprus, and how they will figure out the value of the shares, where they're going to be traded. I don't know if that's a lawyer's dream or a lawyer's nightmare, but that's what's going to happen. We'll get the share certificate. And capital controls are going to be imposed. And again, this is a moving target. But right now, what will happen is that no one in Cyprus, in any account, can transfer out of the country electronically more than 3,000 euro. Withdrawals from ATMs are limited to 300 euros per person per day, and that's an improvement because up to now it was 100 euros a day. Credit cards, debit cards charges are limited to 5,000 euro per person per month, and and banks will not cash checks. You have to get it. You have to have an ATM card if you're going to get cash. Under no cashing of checks. And anybody, whether you're under the 100,000 euro or above, and you have a fixed term deposit, like a CD, you can't liquidate those anytime before their maturity date. So that's the set of controls that they're supposed to last for 7 days from today. After today, I think they're going to be much longer. Iceland had a banking crisis a few years ago, about 5 years ago. 5 years later, controls are still on. So it's going to be how and when they take off those controls are going to be a major issue. The other aspect of the controls is this flies in the face of one of the basic pillars of the European Union, which is the free movement of capital. Now, the EU is allowing Cyprus to impose these controls because they look at some obscure language in a case that had been before the European Court of Justice and said, well, that's what justifies it. So, again, in the tradition of the EU, when they really want to do something, even if the treaty, the regulation, the directive say you can't, we'll find a way. And there are a lot of smart lawyers in the EU. Okay, implications. Obviously a dangerous area to tread, but I think certain things we can say. Cyprus is no longer going to be the international banking center that it once was. There still will be services that maybe still be offered, but bear in mind there were 60 other international banking centers similar to Cyprus. So they will figure out a way to at least offer some services that may still be competitive. Laiki employees, their jobs are just gone. Their pensions, because they're private pensions, are also affected. Whether they end up being zero or not is not clear. Then, as the International Banking Center of Cyprus contracts, all the dependent jobs, the restaurants, the real property, all these other areas that are dependent on that. It's kind of like a military base being closed in a small town. All the restaurants disappear and get hit. It's the same. It'll have the same effect. Obviously, as I've described, the capital controls, that's going to affect businesses. You have, for example, businesses, customers who have maybe prepaid for a service or for a product. Take a tailor. You go in, make me a suit. You pay half the money up front, half when it's done. Well, if you're in the above 100,000 euro, that money, 30–40% of money that may not be your own money is gone. Well, who picks that up? Do you go back to the customer and say, contribute, or do you take the loss? All these very complicated issues that arise from this. One thing I also want to stress is, has been bandied about, again, in the press over all this, most recently, by an economist who I very much respect, Paul Krugman, but he says, leave the euro. Well, that's okay for an economist to say. A lawyer looks at it quite different because there are practical effects of leaving the euro. The most important one is the creation of the euro. If you look at the Treaty of Lisbon of 2009, which is now the founding document of the European Union, the Euro group is 2 small paragraphs in an annex. It does not provide a way for a country to leave or be kicked out of the euro. The only way a country can legally leave the euro is to leave the EU, and that's not going to happen. So that's just one of these solutions bandied about that just doesn't make any sense from a legal point of view. Now, I suppose if the Euro group wanted a country out of the euro, they would just stop sending euros down to that country, and that would be the way. Now, that would violate a whole host of provisions of the Treaty of Lisbon, and I would love to take that case. But it's this is not as easy as people say, and I'm not even going to get into the practical effects of how you now have to redenominate contracts, salaries, and bear in mind that Cyprus's external debt will still be denominated in euros. It's not going to be denominated in Cypriot pounds. So what problem are you solving? Whether Cyprus should have entered the euro at that time, or Greece for that matter, that ship has sailed. The longer term, you have, again, as I said, 70% of Cyprus's productive capability is under Turkish occupation of the republic's productive capacity. So one thing would be for the Cyprus to look at other types of banking services it could offer, and there are some out there. The other is to somehow collateralize or monetize the gas and oil reserves that have been that are in the Cyprus's exclusive economic zone. The other idea would be to develop a high-tech sector, and one way to do it is similar to the way Israel did it in the 70s. They established a bilateral program with the United States where money was put in to invest in companies where there was one American company and one Israeli company. Well, half of the high-tech Israeli companies that you see today were started in that system. So there's a way to think about this in that way. The geopolitical effects, well, if you're going to sell, somehow sell the future of your oil and gas to Gazprom, the Russian gas company, what does that entail for Cyprus in terms of control over its own destiny? And the other issue with the oil and gas is Turkey's militaristic and violent stance that it has taken, saying, look, anyone who goes and digs there, they have implied this, will blow you out of the water. Whether that happens or not is something else, but it raises the concern. The other item that, I guess this is emotional on my part, but it did bother me in the Diane Rehm show when someone brought up, well, what about Turkey's relations with Cyprus? And I said, that's real easy. Get Turkey to pay its compensation under the Cyprus versus Turkey case that has been decided in the European Court of Human Rights, and maybe most of this will go away. The other geopolitical consideration is, what is the effect of now the diplomatic initiative between Israel and Turkey? How does that affect the geopolitical area? And my only, just close with this, Cyprus needs us, meaning Americans, Greeks abroad, in every country, more than ever. And we've got to find a way to participate in this. And I don't have any answers right now, but we're going to get them.
Well, thank you very much, Nick, for the layman's presentation of concepts that are very difficult, frankly, and ones that are still very fluid and continue to develop as we sit here and stand here and speak today, as a matter of fact. But let me ask you a question. You know, another dangerous aspect to all of this is some of the articles we see, even in the New York Times. I think there was an article that was written yesterday as to the potential of more pressure being placed on Cyprus as to come to terms with a deal with Turkey regarding the political issue. And in your opinion right now, how can Cyprus be able to withstand that kind of a pressure, and what they should do?
Well, this is a growing issue. You see it written about more and more. It's couched in diplomatic or neutral terms, but this is a concept that's growing, and it will grow over the years as this deal begins to settle down. And this is where, number one, the Greeks abroad come in. is to every time anyone raises this specter that it be attacked, and I don't care who raises it, and in any forum where Cyprus is discussed, that this be discussed as this is a non-issue. As you can see from the historical presentation and even prior to World War II, Cypriots are very resilient people, and there's a line that they must demonstrate that just is not going to be crossed, and we don't care if we're just eating fasolaka, beans.
All right, we'll open up to Q&A. Just please identify who you are and ask the question.
Thank you again, both for the Diane Rim and presentation.
Just identify yourself.
Stakes Magidis, a Cypriot of certain age that remembers all the crises of the last century. On a lighter moment, my son Alexis, who saw me concerned every day in the last week and listening to the news from Cyprus, said, "Dad, my friends don't ask me anymore where Cyprus is." I hope that there is more understanding than in the past because of this. My comment, especially in touch with my brother, is, and you mentioned the resilience of the Cypriots. And of course you made reference to 74, that was really a major blow. On the other hand, we used to ride donkeys when I was growing up in the village, and then we are three Mercedes-Benz now. I think that's another side of an adjustment that has to take place. We live beyond our means. But my question is on the Paul Grudman article, not because it's desirable, but because in the frustration that we have in Cyprus, and three of the parties actually are asking for a solution outside the Troika. If that's a plan C, which the bad plan, and all the implications that you mentioned legal, who would you advise? Not to think about it or prepare? There's no way.
The only way that it could ever happen would be in the context of the Euro group breaking up for reasons other than Cyprus. And there's another train coming down the road at us right now, and that's Slovenia.
That's right.
Horribly, the banks now are horribly undercapitalized, not because of buying Greek bonds, but for making bad loans. So that's coming down the road very quickly. Italy as well is a bigger problem than anyone's letting on, because we always end our conversations about Italy as saying, well, you know, it's the third, fourth major industrial country in the EU. Doesn't matter. It's got the same sorts of problems Greece has on steroids. So I don't see Cyprus being able to say, okay, we're just walking out of the euro, however you could do it, and end of story. It would happen in the context of the eurozone breaking up.
Allow me one more quick question.
Please.
Is what recourse legally depositors would have, if any?
Well, that's been one of the things I've been thinking about quite a bit. The main recourse for, and this would be really for the above 100,000 euro. Okay, the Universal Declaration of Human Rights prohibits confiscation of property. Ironically, that's a provision that Cypriots and Americans who own property in the occupied area of the Republic have used in the European Court of Human Rights. That would be one approach to, because this is a confiscation. This is not a tax. So that would be one venue. There would be another approach. There is now the European Union has established fundamental rights, which are similar to our Bill of Rights, except it's 400 pages. So there are provisions in there that they could bring, possibly even in the European Court of Justice, the EU's court, that could be used for that. It would be, there could be some actions brought in the Cypriot courts which would have to be brought first in order to go to the European Court of Human Rights. I don't expect any of those to be successful. It would be a long-term process for anyone who wants to do it.
Thank you very much.
I just want to...
Identify yourself.
Oh, I'm sorry. My name's Lydia Pappas. I'm from Drexel University. And I just want to shift a little bit. You talked about the presence, the large presence of Russian investors in Cyprus, and the press over the past couple days has talked a little bit about, suggested the possibility of Russia itself intervening in this Cypriot crisis. And I wanted to know what your thoughts are on that. Do you see that as a possibility? Will Russia step out on that limb, or is this just a EU problem?
Okay, Russia has already stepped in. A year ago, they made a loan to Cyprus of 2.5 billion euros. Now, that was a loan to the government, not to recapitalize the banks, but they're already in there. And part of the deal somewhere in here is going to be a restructuring of that particular loan. But as you can see, it's a pittance compared to what they need. And I think Russia's role in this is going to involve some aspect of the oil and gas reserves. There are other places where that Russian money can go. They're not as convenient as Cyprus, but there are other places it can go. And as one Russian commentator said, how can you steal something that's already been stolen? That's a line from Lenin, actually. So they can play that role as a lender of last resort to the Bank of Cyprus. And I could see that happening if a year from now the Bank of Cyprus starts teetering because of the liability of the European Central Bank it has to pick up.
You had a question?
Yes. Savos Politis with Proclaim National Lab. Thank you very much for your insights. As you said, Cyprus' economic crisis is a banking crisis. Considering the common characteristics with the banking crisis in Ireland, what do you think are the reasons that basically drove the European Union to such a different solution to the crisis relatively to Ireland? And do you also think that there are other geopolitical aspects that are trying to be addressed this way? And if the natural gas resources play a role on that?
Well, if I were cynical, here's what I'd say. With the Irish crisis, that was a banking crisis, but a banking crisis that stemmed from bad real estate loans. And the government then stepped in and said, we'll pick up all those loans, we'll recapitalize it, and then we'll go with an orderly package to the Eurozone and say, you know, we need to recapitalize these banks. And so it was very different in concept than what's happening in Cyprus. I think because the Cypriot banks had their exposure was not due to real estate, it was due to Greek bonds. There was a thinking amongst the Eurozone that, well, you know, you got in bed with Greece, what do you expect? So that's the cynical part of it. And there might have been thinking in that respect. The other part of your question about the Europeans, particularly the Germans, have always had a problem with Russian deposits in the EU, and that they weren't in Germany, and that they were serving such a purpose that didn't benefit Germany at all. So when this started to happen, they would maneuver to make sure that these Russian depositors got hurt. Last November, a secret intelligence study by the German equivalent of the CIA came out saying how bad Cyprus was in money laundering and this kind of thing. Totally wrong. And when secret intelligence is leaked to the press, you always have to wonder. That's the same intelligence agency that gave us Curveball. So, I just, so if I were cynical, what I just said I would say, but I'm not cynical.
Let me ask you a question. You pretty much alluded that as they try to reinvent their economy now in a different direction, part of that, a large part of that, is obviously future earnings from potential energy being an energy hub down the road. Critical to that, of course, is its economic exclusive zones and those treaties that it has negotiated with the other partners within those zones. The Aphrodite field with Israel is the one that's going to come down the pike first for the potential to provide some of this cash stream to Cyprus via the energy. What do you, though, anticipate potentially, and again, threading speculation here, but nonetheless, I think it's important in view of the recent developments of the apology between of Israel to Turkey, as how Turkey might interpret or pressure, for example, Israel within the context of that exclusive economic zone treaty that that Cyprus has with Israel.
I think the pressure will come to run the pipeline through Turkey rather than an LNG plant in Cyprus. Another aspect of what you mentioned is what Cyprus has established treaties, EEZ treaties, under the law of the sea with Egypt, Israel obviously, Lebanon, although it has not been ratified by the Lebanese Congress, and no treaty with Syria, but that's not really that consequential. One concern that I have is whether Egypt, in now its present government, which was not in power when Cyprus made this treaty, may change its mind. And we have had reports that such a bill has been introduced in the Egyptian Congress to repudiate the treaty. And there's no question in my mind that that initiative is coming from Ankara. So.
Thank you, Nick. Congratulate you for this initiative, and your presentation was excellent, the insight and everything. Just to clarify something and add some thoughts and comments. So initially, when the government, it was not the government's initiative to, during the Eurogroup meeting, it was not the government's initiative to confiscate the amount of money out of people's deposits. It was IMF and some of the Eurozone partners with the strong support of ECB that they really demanded that. And it was definitely not our initiative. Well, the drastic restructuring of our economy is in such a time, in such a tight framework, time frame. Sorry, it's a huge task. We cannot hide that we're disappointed and we feel bitter about what we have seen the last few days as a European solidarity, which is not the case, I think. However, we don't have any other choice but to address the challenges and move forward. And just to add some of the initiatives that the government is taking, is moving forward actually in these days. So the president has set up a special task force for the promotion of measures leading to growth and employment, promoting development plans, and building new areas of economic activity. And our first task is to face the huge problem that is going to be created by the huge unemployment rate is going to be up. So many people will lose their jobs, unfortunately, and we have to face this within the following months. Also, it would be good to add here the measures that the Parliament took recently about creating actually the Investment Solidarity Fund to create economic impetus and give the opportunity for people to invest in their own country, even people from the diaspora. So our government and our country has gone through worse circumstances. During the Turkish invasion, you all know what happened. Our economy and productive capacity were largely destroyed, and we managed to recover and prosper back then, and then we're ready to do that the same today.
And I agree totally, Constantine. All those initiatives, especially the Investment Stability Fund, I think is very important.
Can you speak to that a second? Just speak to regarding what he mentioned regarding the pressure from the IMF.
Again, if I were...
Which is American controlled.
If I were cynical, I would say it is absolutely right, exactly what happened. And clearly the vote in the House of Representatives demonstrated that. So I don't... This was something that was imposed on the government. It just, in my mind, I remember all this as you do. It was like the Zurich agreements all over again, where it's imposed on from outside, and that's unfortunately has happened. The Greek junta as well, imposed from outside, and so I think it's very important that now that the government is taking up these initiatives and saying, not looking back, we're going up, we're going forward.
Just to add something, it's something new actually. So this morning the president appointed a team of investigators to seek for and attribute responsibilities where they belong. So we need catharsis to come as well.
And also he's only
Last question.
Gene Mercedes. Nick, you mentioned about the European Court of Human Rights case and the compensation. Can you explain what the holding of that case was regarding this compensation?
The Cyprus versus Turkey was a case brought by the Republic of Cyprus against Turkey. It started a year or two after the invasion and continued occupation. And it went to the European Court of Human Rights, which is the court of the Council of Europe, not of the European Union, but the European Union adopts the decisions of the European Court of Human Rights as its decisions. And that case basically went in very, very detailed after a long investigation by Europeans, not by Greeks, Greek Cypriots, or Turks, and came to the conclusion that the violations of human rights, the violations of the Geneva Convention were so extreme, so huge, that it rendered finally a judgment in favor of Cyprus. And now the status of the case is Cyprus has made a presentation on what the damages should be. Turkey just ignores it, and it is now up to the Council of Ministers of the Council of Europe to get on this and say, you've got to get, this compensation has to be paid. And the ultimate punishment or penalty for that is that the nation is kicked out of the Council of Europe. And ironically, that was about to happen in the late 60s with the Greek junta. They were about to throw Greece out of the Council of Europe, but the junta beat them to it and resigned from it.
But the amount of money has been established. The government of Cyprus has indicated what the damages are.
They've established
that has not been approved yet by the ministers.
They've established a formula. A formula for it because, again, it's a moving target. Because the occupation is continuing, and it's just like in any law, you know, as long as your damages keep building up, and that's where the case is stalled. And you know, maybe we've talked about this, AHI, we've discussed it, of what kind of initiatives are possible within the Council of Europe to get that ministerial ball moving.
Yeah, we need to do that.
Well, we'll finish up on that. So maybe